If you're thinking about getting involved in investment real estate, then it's important to understand the key factors that the market can have on your success as an investor. This way, you can make the informed decision about what your goals and objectives should be, and ultimately make the decision about whether or not you're even thinking about investing in the right market based on what your goals actually are. I'm James Masotti. I'm a real estate investor, and I'm the owner of Our Team Accounting and Crystal Clear Property Management. On this channel, I'm passionate about helping business owners and entrepreneurs achieve their personal and professional goals through intentional financial planning. So let's go ahead and dive right into today's video. One of the first things that you really want to take a look at when you're thinking about investing in a particular market is the overall supply and demand. And generally what this means is the population and economic trends that are going on in that particular market. All else being equal, if you really don't care and you have the opportunity to invest in a market that is seeing economic growth and population growth, then this is really what's going to fuel strong demand for having your rental properties, or if you're thinking about flipping, and that's ultimately going to drive lots of renters and lots of buyers into the market at prices and at rent levels that are going to make you be successful. However, this doesn't necessarily mean that you have to be in one of the hottest real estate markets in order to be successful. There are great tailwinds that you can ride there. However, you can sometimes also crash in those same markets when things correct because they've inflated so quickly. It's possible to be an investor in just about any market. And even in markets where things are really shrinking, there is an opportunity to kind of still be one of the last man standing kind of things and be that person that doesn't sell and continues to hold, and being the one containing and holding all of the assets that are really available in that particular market. To help you be able to investigate, what these trends are really looking like, a couple of websites that I would encourage you to take a look at would be, first and foremost, Census.gov. So Census.gov is the official government website that tracks, population over time, and you can really get a sense over the long term where population trends are going, not only at a macro level, but also within, the different precincts and different sub-regions that the census is broken up into. From there, another one that I really recommend taking a look at is the evictionlab.org. And this is put together by Princeton University and collects eviction data from all across the country. Really gives you a sense of the percentage of renters that are getting through eviction, gives you data about going through evictions, how landlord-friendly, the eviction laws are in those particular areas, to really get a sense of how stable your investment is going to be, so that when you're doing your analysis on the feasibility, you can really make sure that you're properly capturing the effective rent loss that comes from either non-paying tenants or the timeline it takes to evict somebody. Another great form of a website that's very important to take a look at is crime statistics. And so the two websites that I recommend are crimemapping.com and spotcrime.com. Both of these websites aggregate data from different police forces. So again, depending on where you are in the country and what police precincts report data to those, you are gonna, one may work better for you than another does. However, it's very possible that you may also not get this information from, if you're the police department where you're researching doesn't share that information to those. So you can also just go to the local police department websites and see if they do publish any sort of crime statistics by like police precinct or things along those lines, and if they show any trend data, so that even if you can't get the specifics of where it happened, you're at least able to get overall trends of are things improving or getting worse over a particular period of time in a particular part of the city where you're interested in investing. And lastly, kind of an unofficial data source of sorts is the website City Data. City Data is a phenomenal aggregator of data. It pulls data from all kinds of places, including census information, but it really gets down into economic factors, demographic factors. It gives you weather information. It gives you economic information, political information. There's even forums that are on there specific to a region where you can see what kinds of questions and engagement are happening in the community. And so it's just a really great place to kind of go and kind of get an overview. And then if you're looking at one specific area, it may have recommendations for other areas and zip codes that are adjacent to that, and really allows you to start kind of getting really fine-tuned into understanding the little nooks and crannies and nuances as you're narrowing down what kind of markets and what different factors and pieces of information may help you help influence you as you're picking a specific area. And so now that we think we maybe have found markets that we like, that at a very high level seem to match what we're looking for, then the next thing that we're really going to want to start taking a look at is to figure out, do the economics actually start to make sense? And so this next piece is really like, what are the price to purchase ratios, and just in general, like what does the cash flow ultimately going to look like if we are buying rental properties? And so what this basically means is, just because homes are cheap doesn't necessarily mean that they're always going to be a good investment. Different parts of the country obviously have different purchase prices for homes in terms of what you can get. They have different tax levels, but they obviously also have, different markets, different pools and sizes of tenants, different laws that are going to really kind of dictate things. And so there's a rule of thumb out there that's called the 1% rule. And really what the 1% rule tells us is that the rents should be 1% of the overall purchase price. So the easy and obvious example of this would be a $100,000 home should have a rent of about $1,000. Now, this is, difficult because a $100,000 purchase price home could, in one area of the country, have taxes on it of $500, and in another area of the country, taxes could be $5,000. Likewise, a $100,000 condo may also come with a $300 a month HOA fee, for example. And so there's not a perfect correlation or ratio of this, but it's a great place to kind of start when you're looking at a very high level in terms of determining, might a market be a good fit for positive cash flowing investments. Another reason we want to pressure test that 1% rule is that we never want to forget that there's this capital expenditures bucket, and capital expenditures are going to be pretty similar across the country, but they are also going to vary market to market. So again, I've got this list here of the different expenses that you can anticipate seeing. This is a starting point list of things. And so when you're going through this 1% rule, it's important also to realize that in different parts of the country, different elements of what's on this list could ultimately be more or less expensive to influence whether that 1% is enough, or if you need to maybe even go to closer to a 1.5 or 2% price to rent ratio. Now that we've gone pretty high level and we've looked at the 1% numbers, the next thing you're going to want to do is actually dive a little bit deeper. You're going to want to dive into specific neighborhoods and sections of the city to identify what the actual purchase prices and rents are there. This is whether you're investing in the city, whether you're investing in more suburban towns or even rural areas. Access and location and year of build and size and all of these different things are going to be greatly influencing what the rents are that are going to be. So I wanted to share here a copy of my rent tracker that I use. And so what this basically goes to show is I'm basically tracking the address, a link, bedroom, bathroom count, square footage, when was it listed, and what the available rent was. And I do this by identifying, in Zillow, the specific, area and neighborhood. Again, my properties are in the Wilmington, Delaware market. So you can kind of see as an example of, this particular area happens to be a particular neighborhood where houses tend to be pretty similar, different, the types of people that live there are similar. And it gives me a kind of a sense for, looking at what's going on. And so I'm going to make a separate video that goes into this specific tool in more detail. However, I wanted to just kind of high level show that this is the kind of research that you will eventually want to make sure that you are doing in order to get to that really detailed level of understanding about what the rents are in the market where you're considering to invest. All right, so the next thing beyond just those rent numbers is going to be one of your next biggest expenses, which is going to be property taxes. Now, a very common mistake that a lot of people will make when it comes to property taxes is whether you're looking at Zillow or Redfin or Realtor.com or whatever it is, and they all, these websites nowadays tend to list what the property taxes are on their particular website. However, I want to tell you to use this with extreme caution, and that you should instead, as you're looking into the market, actually go and do the research and find the publicly available tax records for that particular municipality, city, state, whatever it is, and how they're organized. Almost all of the areas around the country now have a publicly available database that you can search online to look up specific tax records. And the reason that I say that is using it, for example, where I invest in Wilmington, Delaware, which is a part of Newcastle County. So the Newcastle County Assessor's Office does have a searchable website that you can use in order to identify the taxes that a particular property pays to the school and to the county. However, what it does not capture there is the fact that the city of Wilmington has its own tax levy that is not disclosed on that particular website. And so the information that is aggregated by Zillow and Redfin when you see those listings is only the information that it is pulling off of that county assessor's website, and misses the fact that you also have to pay taxes to the city of Wilmington. So it's very important that when you're investigating taxes, because this is a significant expense, that you do your research, you dig into, like, for example, the forums on city data. You should even be able to use, your AI resources like ChatGPT and Gemini, Claude, things along those lines nowadays, to be able to ask the simple question of, like, if I'm buying a property in this particular city or town or whatever it is, what are the different, property taxes that I need to pay, and make sure that you've identified where to find all of that and how to calculate the overall property tax burden. So now that we've identified the high level rent numbers and identified the property taxes, of course, one of the most important aspects that is going to impact your profitability is your vacancy number. So this is one of the things that a lot of investors don't put enough stock into, is understanding the impact of not only physical vacancies, but also what we would refer as economic vacancies. So a physical vacancy is an obvious one. So that's just when your property is sitting vacant and how long it takes to fill. So different markets are going to have different supply levels of housing, as well as different supply levels of tenants, and how frequently they are needing to move and find new housing. And so being able to do your research, whether it's calling property managers or, again, doing tracking like I showed on my tracker in terms of when was a property listed on Zillow, when did it get taken down, can start to give you some indication of how long it takes to fill a particular property. But you also have the economic vacancy side of things. And that's where, for example, information from like the eviction lab can become very helpful, because you might have a tenant living there, but understanding that they're not paying rent and that it may take 6 months to get a particular tenant out in some areas, you really need to make sure that you're factoring in a vacancy number that is appropriate for your market. Another big reason why vacancies matter is the fact that tenants are most likely going to live with all the little things that kind of happen just as a part of living in a property. And so when somebody moves out, you're oftentimes going to have to fix these things. And depending on the security deposit laws in your state, there's a very good chance that the security deposit isn't going to cover all of them. Again, using Wilmington, Delaware as an example, in Delaware, we can only charge 1 month's rent plus 1 month for a pet deposit if the person has a pet. What this means is, in an example of a property that I have rented for $1,200 a month, I can collect $1,200. Well, if I need to repaint a portion of that house, that alone might cost me $1,500, let alone any cleaning fees or anything along those lines. And so I'm immediately out all of that. And so if a tenant, if market rents are going up and things along those lines, and you want to have a tenant move out, you really need to take into consideration that a new tenant moving in may in fact need to pay several hundreds of dollars a month more than what the current tenant was in order for it to actually economically make sense for you to go through that transition, because of $2,000 or $3,000 in costs. Because if, for example, let's say you live in a really great market, or an okay market, and it's going to take you 30 days to fill the property from when the person leaves to another person. So that means not only did it cost you the $300 to touch up the paint, but let's assume it was a couple more dollars because you had to clean the place, you had a couple of other things that you had to do. Let's say you're all into it for $1,000. Then on top of that, you just lost a month's rent. So that's another $1,200. So now $2,200 out of pocket associated with vacancy turnover costs, that again, if I'm only getting an extra $50 or $100 a month in rent out of that next person, in order for me to break even on those costs compared to the tenant that I had in there, the person would need to stay for at least 2 years. And so understanding the average tenure time of your tenants is significant, and also making sure as a landlord that you understand and that you do a great job of screening people You do a really great job of being clear about what your policies are going to be, that you have a really solid and robust lease, so that when people come in, you can treat them with dignity, with respect, but also make sure that they're clear and firm on the rules so that they stay as long as possible, so that you're able to pass along small increases every single year that may not necessarily keep up with the market, but also if you're able to make those increases, have the person stay for the long term and reduce your vacancy numbers, this is going to be one of the biggest things to improve your overall cash position with your property. If you're interested in raising capital from investors, then go ahead and scan this QR code right here to access the template that I use to get my first couple of investors. Investors are always going to be concerned about how you're going to preserve their capital and return it to them. And yes, they want to know about what their returns are going to be, but at the end of the day, as long as it's not some like crazy number or way below the market, they're far more interested in learning about you, your character, your quality, and how you're going to protect their capital. So click the description below or scan the QR code to check out that download. The next thing that we want to make sure that we dig into is understanding the landlord-tenant laws that exist in a particular area. As you start investigating real estate investing, one of the things that you're going to come across is the lists that are like the most tenant-friendly states or the most landlord-friendly states and things along those lines. And while these are very broad generalizations and you can't necessarily put specific numbers on a lot of things, there are things out there, for example, how long it takes to evict somebody, the average time it takes to evict somebody, how easy it is to evict somebody, what kind of security deposits you can hold, how long you have to give somebody notice before they leave, whether there's rent control in place. All of these different factors can really influence the profitability for you as a landlord. And so it's important that you not only understand these things from a financial perspective, but also from an operational perspective. They can definitely significantly impact yourself, and just make sure that you're being compliant with the laws when you eventually get into there. One of the things to keep in mind, though, is that just because these laws are all set up, the reality of the fact is that these laws are all set up because there, at one point in time or another, were bad actors that took advantage of people and did things that they weren't supposed to. So again, just because places have these laws doesn't necessarily mean that it's going to be impossible for you to invest in them. Delaware isn't necessarily considered to be one of the strictest, most tenant-friendly states, but I can certainly tell you it is by no means a landlord-friendly state either. Does that mean it's not been a good place for me to invest? I've had some ups and downs and some difficulties, right? But in general, over the long term, it's still going to work out and do well for me, because we take care of our properties. We take care of our tenants. We try to be very transparent, hence the name of my property management company, Crystal Clear. We believe in crystal clear communication with all parties that are involved. Now, if you're going to be a slumlord, I'm going to say it, you're part of the problem. Just stop. Don't do it, because that's why these things are there. So if your idea is that you're going to go in and you're going to buy these cheap houses, you're not going to fix them up, you're going to treat your tenants like garbage and do all the things that are wrong, that's why these laws exist. And so do the right thing, do your research, understand what you need to do, protect yourself, but also just treat your tenants like humans with dignity and respect, and you're going to be fine more times than not. As you're investigating your landlord-tenant laws, the state level laws are going to be really easy to find. But if you are investing in particular in a city, it's very possible that there are other city-specific laws that you may need to be aware of. For example, again, in Wilmington, the utility cannot be transferred into the tenant's name. And so it's the tenant's or the owner's responsibility to continue paying that. You can't, and then you have to pass that expense along to the tenants. It's also a law in the city of Wilmington that if you don't live in Newcastle County, then you have to have outside property management to represent you. And so while these aren't necessarily specifically landlord-tenant laws, I would kind of throw them in the bucket of understanding the legal environment under which you as a property owner, an investor, a landlord would need to operate. And so not only looking at those high-level laws, but again, in the municipalities, counties, cities where you're going to be investing, do that research to understand what additional requirements and responsibilities are on you to take up real estate investing in that area. Now, if you really want to start leveling up your game from a real estate investing perspective, everything that we've covered so far has really all been focused on, buying good properties and making sure that they cash flow from day one. And I will always advocate for folks to buy properties that are going to cash flow, especially in the beginning, because you don't necessarily have a ton of assets and resources available to you to kind of go into some of these more advanced strategies. Because the real wealth in real estate is not necessarily made by the cash flow that your properties are going to throw off, but by the growth in equity that you're going to experience because your property values go up while you're simultaneously paying down the mortgage balance on your original acquisition. And so when you get to the stage where you're really starting to think about how you want to invest and deploy your capital to really get that highest growth possible, starting to understand the future plans for the city that you're investing in, or the state, or the specific geographic region, right? Understanding, are they passing laws that are going to restrict business from coming in, or are going to limit who's able to move into a particular area? And understanding kind of the economic factors, right? Like, what is the zoning board doing? So, for example, in Wilmington, Delaware, again, just because that's the market I'm familiar with, there is actually a surplus of vacant homes inside the city of Wilmington. And so the city basically has the city zoning board, while there's no official policy in place, if you lose your zoning variance to have a property be a duplex or triplex and a quadplex because it wasn't originally zoned to be that way, it was originally zoned as a single family home, you're not going to be able to get that zoning variance reinstated because there's too many properties. They would rather have a entire family living in an entire house rather than trying to have it split up into multiples. And so being able to understand some of those deeper things that you're not going to find, there's no law that says you can't do that. As a matter of fact, the zoning laws say you can do that. It's just understanding that the zoning board hasn't approved those in a really long time because of the state of things. And so as you get deeper and again are doing that research, getting on the forums, getting into Facebook groups, going to zoning, going to planning meetings, doing research online to identify, what things are being voted on by the town council, new businesses that are talked about coming in from news reports, things along those lines, will really start to help paint a picture for whether or not the economics of that particular area are planning to grow and expand, or if they're in more stable or retractionary state. So then I've gone over a bunch of the things that I'm aware of and that I've certainly looked into when investigating, potentially going and investing into other markets. I would love to hear from y'all what it is that you look for when you are considering investing in a real estate market. So go ahead and drop a comment down below and let me know, and I will look forward to engaging with you there. And so now that we've talked about how we're going to research our market, the next topic that we're going to be diving into is how to get your finances in order so that you can start getting ready to actually purchase a property in the market that you've identified. So go ahead and click on the video right here on your screen right now, and I will see you over there.